Hello guys and welcome to another video. Before we get started with it, I want to say the next. I am not a financial planner nor a financial advisor. I am not FCA approved. I'm not approved by any institution that allows me to give financial nor investment advices. Nothing mentioned in this video should be considered investment advice or guidance. Everything shown, talked, and explained is for pure and only educational purposes. The risk is on your own hands. Enjoy. Hello guys, good morning. Today is Monday, October 11th, right? Right? Yeah. So I'm going to be doing something a tiny bit different, which will be basically backtesting today's price action and trying to recreate what I was thinking, basically from early in the morning, right? And basically try and help you, well, not help you, but try to give you as much knowledge as we can get from today's price action. And yeah, hope you enjoy it. Hope you take something away from this, and we'll get started as soon as I hide all of this. Okay, 11. So okay. So as I talked about, as I talked about on my Telegram, the first thing that I do early in the morning is analyze the price action that has happened, the POIs that are on 5 and 15 minutes, and yeah, that's pretty much it. That's the first thing that I do in the morning, so let's begin with that. The first thing that I saw was this type of structure where you have push up, retracement, push up, retracement. So I was expecting price to get into this, right? And then continue to go higher. Now the thing is that here, what I see is that we had already had a pretty strong reaction to, well, nothing from the 15-minute time frame, which basically did throw me a little bit off because if a POI isn't actually met and we start to react strongly, it's a little bit hard to know what to do because you have the reaction that you were looking for, but it didn't happen where you were expecting it, right? And the problem with that is that you can try and trade the move that currently is happening as a continuation, right? But what could easily happen is for price to basically fail, right? Well, actually, let me go to 1 minute. So let's say you wanted to trade it from here, which was one of the POIs that I had drawn, and you can try and trade it from there, but as an example for me it was risky because price could easily just do something like this. It causes a reaction, fails to hold, and then we can try and sell from that POI. So early in the morning, this was what I was actually looking for, somewhat of a reversal of this move to get actually into the POI, right? But I don't want to get into that because we're getting ahead a little bit. So out of the 15-minute time frame, we only have this POI, right? Of course, we've got a couple of others, but this is the only one that is not mitigated, right? Because we had all of this, and that's it. So 4 POIs that were already mitigated before we started trading. So that's the 15-minute POI. Now, when I see that we were already reacting, and if you check to the left on this level, we were reacting to this, right? So basically, could consider the whole thing as of this. So I didn't really like it, and I don't really see the point of going for, as an example, 1 hour structure. But in this case, I thought that it was not necessary, but it could have been a little bit of help as we were, as I said, basically reacting out of nowhere. Now, in the 1 minute, in the 1 hour, sorry, that doesn't actually, it's not like that, but we are reacting to this order block, which is the last bearish candle before this bullish move, right? And also this bullish move caused a break to this major structure to the left, right? So it's an order block. At the same time, if we look at the 1 hour structure, this is my confirmed high, or maybe even this, and this is my confirmed low. So all of this happening in the middle is just substructure, right? So I'm seeing this right now, and I was seeing this as just a retracement to then continue to go lower, right? Because when I see a move, well, you can see it here, move down, retracement, move down, retracement, move down, right? Unless we actually change that, let's say we break this high, that's when the trend could definitely change. But right now, what I'm expecting is for this to be a retracement to then continue to go lower, right? Just base yourselves on structure. That's the most basic thing that you can easily basically use, right? When you're creating lower lows and lower highs on higher time frames, you basically have a bearish trend, right? Whenever that changes, then you have a bullish trend. Again, I've talked about this a couple of times that I don't really use higher time frames, but it's an example in this case where, as I said, you don't really have a clear 15-minute POI that price is actually reacting to. Then we go to the 1 hour, we do see that we have something, right? We have something. So without this POI, right, let's suppose that we do not have this POI drawn, we could have done two things. Either wait for price to reverse and fall down to this. That would be scenario 1. Then we could try, or scenario 2 will be to basically act as if we were reacting to something to the left and try to trade continuation, maybe to this or the extreme, whatever we're looking for. Or third case will be just stay out, right? Stay out, see if we get to this POI or we get to this one, right? Just stay out, right? Just be a little bit patient, see what price does. Basically just take our time and allow price to develop some clear structure and clear intent before we actually get into the markets, right? So what I decided to do though was to draw this, right? So you know what, we have a 1 hour POI. That 1 hour order block had cost something, so in my opinion that was good enough to actually go for that, so just went straight for it, right? So yeah, those were that's my 15-minute bullish POI. And then I had this, which will refine down to the 5-minute because it looks pretty good too. Or I think it was this one, not sure. This one wasn't actually met, so might as well not even draw it. So the 5-minute was pretty much the same thing, so I'm not even gonna take the time. And we could refine it even a little bit more, which I did, but as you know, price actually didn't come back to this, but that's fine, might as well draw it too. So this is what I see when I get into the markets, right? I want to identify which areas are going to be stronger than other areas, right? Because right now we have different POIs that have formed through the morning and through this push down and through the push up. And I see, as an example, we had this POI which failed. We have now this POI that basically was a pause to then continue to go higher, that basically broke this high. And actually I think it broke supply here, because as you can see we do have a wick here, so it means that price in lower time frames made a retracement and then continued to go lower, right? And this move here, basically what it did was react to that retracement, went a little bit lower, right? But then failed to hold. So the cost to that is something within this POI in the 5-minute. Safest bet will be to go for this whole thing, entry there, stop loss there, and target will be that. Not something that I like to do. I don't really like trading in other time frames more than the 1 minute, but looking at the 5 and the 15-minute really gives you a lot of advantage by keeping in mind what's actually going on, right? Because on the 1 minute, maybe this move, let's actually go with this. Maybe this huge retracement let's actually go for the 15. On the 1 minute, this let's call it this move down is a whole trend, right? We could have sold maybe here, maybe we had an entry somewhere around there. Now basically a lot. But on the 15-minute, this is just weird looking structure. There's not really much to go for, to use, and that's what the higher time frames are for, right? Just having in mind what's going on, what has happened, what could happen, because if you go higher and higher into the time frames, you can easily identify what could happen next, right? Because if we were here, right, being here, let's say we were in the tip of this, what do we expect to happen next? If we are creating higher highs, higher lows, 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 the next thing that I'm expecting is for price to break this high. Now that failed, that clearly failed, right? And what happens? We have a break here, so it's already a trend change. We have an area of demand, causes a reaction but fails to hold. We break that area, so now we have lower lows, lower highs, lower lows, lower highs. What do we have here? This is the cause to the flip. You have an entry. Then you break this low, the cost is this, price goes for that. You have a break, price actually doesn't get to this cost. Have a break, price doesn't get to this cost. You have a break, price gets to this cost, etc. Right? So the higher the time frame, the easier the bias is to identify, right? When you see lower lows and lower highs, the expected move is a lower low and a lower high, right? Here, basically that, right? Just with using just structure, sometimes you can really guide yourself on answering that question of where could price go next, right? So analyzing the POIs that we currently have, I see that this one has failed, but as you can see, it didn't even cause a reaction, right? So what does that mean? That this is not a flip. If price would have caused a reaction and then broke, then this would have been considered a flip on the 5 minute. Keep in mind that we're on the 5 minute. As it just went straight through, this is only a trend change, right? Because we have a low, a lower high, a lower low. And we could have even not considered this a high, right? So we just would have been, it would have been a break of structure, but not even a trend change or anything like that. But I consider it a, early this morning, I considered it as a trend change on the 5 minute, right? So, the most important POI, in my opinion, right now on the demand side is this, right? The cost to this break, this trend change comes from mitigating a POI, so looking strong. And on the supply side, it's this one. And the question will be why, right? Because you have this one, could go even for this one, have this one, and you have then that one, right? So you gotta pick a couple of POIs. Now the thing that I see is that price creates this POI, and price again broke some structure on the 1 minute, right? And on this week's, price came back to mitigate that area, right? Because this area basically will be something like this. I can try and zoom in, doesn't really matter. But as you can see, this week, which is part of the POI, right? We could consider the whole thing as a POI, gets mitigated by the candle that we have here, right? So, and when we break this low, the POI we could consider is this whole thing, right? As you can see, we break the low and price came back here, right? We break the low, price went up, went back for the cause, mitigation after mitigation after mitigation. As you can see, this happened through London. London for me, if I'm right, it's from 4 a.m. to, well, from 4 a.m., right? So this was all a London session. So you had maybe one trade here, and this one, right? And probably even the next, which is the one that we actually took advantage of today. So what I see is that we have a series of mitigation, this huge POI, which, as you can see, I like to see this because it happens very often, where you have just a very slow and price comes back to mitigate every single POI that it left behind, right? And out of nowhere, it just makes like a sharp move, comes back, mitigates that, and then you have the next sharp move, right? So a continuation will be that. You could have traded, definitely could have gone for all of this if you were able to and identify them in time. But basically, for me, I don't really like when price is not showing that much strength and is going slow, right? Sometimes I have taken advantage of those moves, but I prefer to see something that actually has a good strong move, right? So, yeah. Here, as you can see, we had this POI, price came back down, came back up actually, mitigated it, broke the next low. So the next continuation will be on basically this whole POI as it is. I leave it like that because that's the 15. I think it's from this candle, this black candle, to this one, to the close, well, the wick of that. And as you can see, the low is broken here, so the cost could be considered, the whole thing could be considered this candle, but we could argue that that was mitigated there. There are a lot of things to really consider, but the mitigated, or when price really comes back to mitigate something, I like to see it like this, right? When price comes back to the area, right, and then causes a strong reaction, comes back to the area and gives an actual opportunity, right? In this case, we hadn't broken the low, right? And price came back up to mitigate that. So I still consider that this area itself, it's still not mitigated. And even though, as an example, we may go to the left, well, no, not really. But sometimes you will have like the areas are like this, or let's say this happened something like this and price went up just taking its time, right? It's not really necessary that that area is mitigated and you can't use it. Not at all. I will draw it anyways. I wouldn't take a risk entry. I mean, I wouldn't take a risk entry here, just like this, nor here, right? It's just not the way that I like to trade. But having the area drawn, and when price gets there, you can either look at it like that as an opportunity of a reversal if price is going down, or a continuation, right? Because price reacts to the area, but then fails to hold, and we go for this. Kind of went a little bit hard there, but yeah. So not because an area is mitigated, you will not draw it, right? You will keep it in mind, but you won't pay not pay attention. You won't take or you will not think of it as a very strong area as others that were not completely mitigated. As an example, this one, we have a pause, then price impulsively went down and never came back until this, right? So that's completely unmitigated. Here's an example. You do have price coming back into the candles, but still draw it because it could be of importance. So these are my 5-minute POIs. Taking a lot of time on this, but I think it'll be for the best. So what do I do next? After analyzing, give me 1 second. Okay, so what I do after analyzing 15 and 5-minute structure is see what has happened on the 1 minute. So this is literally what I do, right? We have a push down. We have been pushing down. We have a flip here, right, when we break this low. As we had a demand area, price reacted to it, failed to create a higher high, and then failed to hold. So that's the flip. The cost to that flip was this. So if I were to take a risk entry after this flip, it would have been here, right? So that's an unmitigated area that we could see price basically getting into later. We have then lower lows, lower highs, lower lows, lower highs, and you can see the thing that we were talking about on the 5-minute, it's way clearer here, right? You see a lot of mitigations, right? Breaks and mitigations, etc. Right? On in the 1 minute, we could even refine down to this, right? Which is actually respected, and basically that's what we have. Okay, gotta consider that high. So that's literally what I do. Now when we get to the closer price action, it says so we have a low, we have a range, we have a low, lower low, sorry, lower high, lower low, lower high, lower low, lower high, fails to create a lower low, and we change the trend, right? So what happens here? What we have to keep in mind is the areas of supply and the areas of demand, right? Areas of supply and demand are basically order blocks that have basically caused to move towards one direction or the other, right? To call somehow. I don't really know the actual concept, so you can look that up if you want, but yeah, just want to say that. So this is an area of supply for me, as it has caused demand areas to fail and basically have broken lower lows, has created lower lows. And as you can see, if we would have been awake for this and we would have seen this as a trend change and we wanted to be risk and we wanted to take the risk, this break could have been enough for an entry to go for something like this, to go for the extreme, to go for the whole area, whatever you want to go for, right? Which would have been a profitable trade in this case. Not something that I like to do, right? I prefer to take a little bit more of time to analyze things, to see what price is doing. So basically not something that I would have completely gone for, right? This is the area that I drew, right, on the 1 minute, expecting price to maybe do something like this, right? This is what we have, maybe a higher high, higher low, higher high, and then we see somewhat of a flip at some point, right, that we can trade from, and then continuation to the downside, right? Which is quite what I took advantage of, and we'll see. And the reason why I didn't actually target this, it's because while the session basically occurs or advances or goes forward, basically while the session is passing, time is passing, new structure is created, and this area that looked really strong at this point, right, taking this lowest liquidity, maybe that's the flip, we can trade from here, trying to go for this. This was looking really strong early in the morning, but then when newer areas were created, which this was the one that price reacted to, and you'll see why, basically new areas are created, and some areas will have better confluences or stronger confluences than that first area that you had identified, right? And the reason why I'm taking a little bit of time to explain that is because you have to continue to analyze, right? Because let's say you just analyzed what has happened on the 1 minute, on the 5, on the 15, and you don't really upgrade your charts, update your charts every maybe 10 minutes, 5 minutes, 15 minutes, basically as much as you can, unless you actually take this time to update your chart, you will miss out on so many details that you will miss out on trades. You will take stupid losses, you will trade dumb areas, what I call dumb areas. You will trade areas in the middle. Which areas in the middle, as an example, this area ended up being an area in the middle, right? Looks strong because it comes from mitigation. Wait, what's this, an area in the middle? I don't remember now. Did we get all the way up here? We'll see. I don't really remember, right? But basically, an area in the middle, as an example, having such an extreme area here, I would have not really considered trading from here, nor from here, and neither from here. At this point, of course, we're tapping this, so we're not really interested in selling. But basically, as an example, maybe even this could be considered an area in the middle, right? Not an extremer area. But at the same time, this area, even though I considered it was in the middle, it ended up being it's inside of the major POI on the 5 minute, which is an extreme area, an important POI, and it's not in the middle, right? So that also talks about how having different perspectives from 1 minute, 5 minutes, and 50 minutes really does change a lot the point of view, right? Because it's not only here it's an area in the middle, right? But on the 5 minute, this is not an area in the middle. It's an extreme. So if we were to trade this is not a bad trade, right? It's not a bad trade. We're going against a 50-minute POI, a 1 hour POI. So 5 minutes against 1 hour kind of does not make sense. And it's a mistake that I actually made on Friday, if I remember correctly. So I traded against a, let's say I was on a 5 and I traded against a 15-minute POI. So the higher the time frame, the higher the importance to that time frame. At least that's how I see it, and that's how it has been working out for me, basically. So after analyzing everything and taking as much detail as you can on the charts, you begin to trade. Well, not begin to trade. It's not like you start placing trades like crazy. It's not what you listen. It's not what I'm looking for. But basically, what I decided to do is that when price was advancing through the session, right, seeing all of this happening, what I basically thought at this point is that we could easily get all the way up to this, see a retracement, right, to then continue to go higher, right? So having that in mind, that's when I started to basically refine this area. So I said, so this is a strong area. This is another strong area that was not mitigated at all, and the extreme will always be a good area. So you can see price did mitigate this by a tiny bit, but at the same time I thought, well, this could be considered as liquidity. I don't know if I actually have the yeah, so you can see if I delete one, that's the other one, right? So I consider that as liquidity because they're relatively equal highs. And we thought, you know what, might as well just try. Okay, so that's when I did that. At this point, it's when I did that. Basically, refined it. Could have done it earlier. Honestly, I don't really like having the arrows drawn. As an example, if price was to mitigate this, and I see that it's reacting, then I see to the left. Okay, so it's kind of reacting to this refined area. Let's draw it and see what happens. And if it breaks, then I delete it. Right? Simple as that. So yeah. What do I see here? Remember on the 5 minute that I said there was a wick? This is the wick. This move here, it's the wick. Price, as you can see, on the 1 minute, we had a flip in supply and demand here, right? Demand takes over when this area of supply causes a reaction, fails to hold. That's my flip. This is my flip from supply to demand. Right, so we start to go higher. So you can see we get into this POI, which is an area in the middle from my point of view, and as you can see, we create a higher high. So this is an area of demand. Price reacts to that, fails to create a higher high, right, and falls down. So this was a flip. If I would have been awake at this point and trading, I am not sure if I would have gone for this, but I might would have. right? Because I do have a good amount of confluences, and the only thing that I don't really like is that I feel like I'm trading in the middle. And I will try to explain it through this video, what's an area in the middle. I mean, I tried to at the beginning, but it's something that I don't know if it has come from experience or time in front of the charts or anything, but basically sometimes I just look at it and I think, okay, so it's not really in a important position to call it somehow, right? As an example, all of these, even though they're POIs, they're pauses, I don't really like them. The only one that I like is this one because it was the pause before breaking this this high, right? So just having that in mind, this is a pause that basically could be considered as a major break, causes the major break, but not an entry that I took, right? Not an entry that I took, but I did have this demand area drawn as I had this other one, right? At this point, I was discussing with myself either if I should take this extreme as a risk entry or not, but I felt like I was in an area in the middle, right? What I was actually expecting was the price to maybe react to this, right? Failed, give me an entry. This one causes also a reaction, but maybe reacts to something like this, continues to go down. We get down to the extreme, and that's when the trend changes, right? So that was my first analysis, right? But what happens later is that this area of demand failed to hold catastrophically, right? Well, not catastrophic, right? But it failed to hold. But what happens next? We go up. We go up, and we have barely broken that low. We have barely broken that low. And as an example, I have the note here. This was, in my opinion, an area in the middle, right? My problem with this trade is that we are in the middle of many really good areas. Besides from that, price barely broke the demand area. I wouldn't even consider that a break, but I still like to sell as a hedge all the way down to the buy limit. But as I dislike the area itself, I'm going for a small risk, right? So if I remember correctly, I risked a 0.25. I'm currently risking 0.5. Let me actually hide all of that. So I went for half the risk. And the thing is that I like the structure itself, right? You see that price is failing to get higher, fails to create a higher high, then breaks down. We have first a small reaction to the area, then fails to hold. And if we would have had a larger break, and maybe if this would have been a little bit more slow, I think that would have been a really good trade for me. I would have taken it without hesitation and actually going for that full risk, right? If the break would have been something like this, right, where you see that price is actually pushing, right, because the way that I measure if it's pushing or not, this took 17 minutes to go 3.9 pips up, 37, and this move down took 3.9. 3.9 pips in 10 minutes, right? So we're talking about 17 minutes against 10. It's very minimum, right? And this move wasn't that strong. But as an example, this push up is really strong, and this bearish move down is even better, right? Even stronger per se, right? But I just don't like when price, I mean, I've said it a lot of times, when price gets to an area and immediately falls, that's not a sign of strength for me. Even if we get something like this, I would not go for the CE of that, because I feel like that high is not going to hold. And I think that's something that's maybe a pattern, something like that. It's just something that when I see it actually happens, I just don't like to trade that. So we broke the low, and I was hesitating to trade, and when price was actually somewhere around this area, that's when I decided to place the trade, right? Because it did take a good amount of time, which is good, right? Because you have impulse, retracement, impulse, right? But yeah, it failed. It took its time to fail. And the thing that I did is that when this started to move down, I moved my stop loss to half, if I remember correctly. So I ended up losing a 0.10%. So a very little risk, a very little loss. And yeah, that worked out great. I mean, the area was just not an area that I really liked, and that's the reason why I risked less. And but yeah, basically that. So at this point, what you have to keep in mind at all times, not every maybe 5 minutes, every 10 or 15, but all the time, is just have the bigger picture, because right now you're seeing the price is pushing higher, right? I'm losing myself here. I feel like I'm talking and I'm not talking. You just have to pay attention to a bigger picture, right? What's happening? We are reacting to a strong 1 hour POI, right? we haven't made any strong pullbacks to then continue to go higher, right? Which is something that price has to do at some point. Don't get me wrong. I mean, this push could have continued like this for 3 days in a row, and at some point it would have retraced, right? But from my experience, it doesn't actually take that much time, and it usually does it on the same day. So at this point, I like this POI better than the extreme, and the reason to that was that the extreme was too far, and I think that's it. Honestly, sometimes I just pick an area because of where it is more than anything else. And for me, this was not an area in the middle, but it's neither an area that I would actually like to risk entry, right? So I didn't place a risk entry here. I had a risk entry here when we were trying to sell here, right? Because it made sense for me. And then I took a buy limit. I think it was... No, sorry, it was here. It was here, right? When I was expecting this move to happen here, and that's it. So after that, I never had a buy limit here, right? But because price was always too far away. And well, here I just had it here because it made sense, made a little bit of sense, but it did feel like I was a little bit in the middle, right? But at the same time, this area was the cause to its major break, which caused the supply area to fail, right? So we did have a good amount of confluences for that area, but it's just something that I just wasn't feeling entirely safe to go for, right? But when I placed this trade, waiting for this to happen, right? I was risking a full 0.5, so yeah. Let's see what price does later. At this point, the best area that I was seeing was this, but not much more than that, right? Not much more than that, and I didn't really like this because it was, I don't know, just doesn't show much strength or as much as I would have liked it to. Here comes the first loss of the day, right? Well, the second loss. I don't really count this one because it was really small, but this is the first big loss or full loss of the day. So what happens here is that we failed to, well, this area failed to hold, right? At the same time, we were still within this, which is what I was kind of looking at and say, well, it kind of did hold that. So we could think that maybe it took this high as liquidity and blah, blah, blah. So I thought it could work out, right? We didn't really have much of a flip if you think about it, because this is an area of demand here. Price respects it, but it's not a really, like as an example, if we would have had something like this, I would have gone for that, right? Because this is something that actually caused a strong move down and then a strong move up, right? But this is just like a small pause that caused a very weak move to the upside, and then immediately retrace back and then creates another area, right? So I could have considered this my area of demand, but as you can see, it goes right through. But I was still liking this structure, and I was still looking for that big retracement, at least all the way down to this, right? So I decided to go for this. As you'll see, price immediately went through it. Well, not immediately, actually, it did take a little bit of time. But that's what basically happened, right? Now we are on a little bit of an extreme area, which the farther away we are from the open, so this is the open of the order block, right? This is the close of the order block in a drawing scenario, right? Because if we actually go to the candle, that's not the open or the close. I mean, it might be, but we're not looking. I don't want to explain that. But basically, the more farther into the order block we go, the better, at least from my experience and for what I like to look at. So we're pretty deep in, right? But I was still looking for a good amount of confluences, right? So we tapped the extreme. Now you'll think we didn't actually take the liquidity. And I actually just realized about that, not gonna lie, but basically we didn't even create more liquidity, to be fair. And at the same time, we're kind of reacting to this, actually. Are we? Hold on. Yeah, we're kind of reacting to that. So basically, when I saw that we had reacted to this, barely what we did, I think the area was a little bit lower, though. Yeah, that's what I had drawn. Yeah. So just that candle. What do I have right now? Oh, I consider the extreme. Okay. Yeah, it's the same thing, basically. So we tap into that area. We have one break. We have two breaks. And the scary thing And I should have already, oh yeah, hold on, this was not the profitable trade. So the scary thing here was the area of demand, because we could have considered this an area of demand, caused a reaction, and now we have a flip, right? But I didn't like that. I thought it was a little bit risky for me to do that, so I decided to hold on a little bit more. When I took this loss after taking this one, right, I was feeling a little bit like I was trying to force a reversal, so that's when I thought, then I have to try and buy, right? And when I actually placed this trade, this area that you'll see will fail pretty easily. It does cause a small reaction and everything. But this trade, I closed it when price did this, and then I think it started to go higher, and then I moved down and I decided to close it because I didn't like the trade. I felt like I was kind of revenge trading, right? And because of this loss, right? And at the same time, I thought that we had a pretty strong reaction from these points, right? They should not basically miss out on that, right? So that's why I closed it, just a break even, not much more than that. And I thought, okay, I'm not really trading as I want to be trading, right? I stepped back. I said, what's going on? What's going on? And I take the 5 again, right? We were still updated to call somehow. The actual candle was does not hold. I mean, we'll go a tiny bit higher in just a minute. But basically at this point, everything was all right on the 5 minute. I see that we could consider this as my confirmed high, this my confirmed low. So we were trading in the middle, and the next move we should expect is a continuation to the downside, right? Trying to break this low. But at the same time, we were reacting to a 1 hour order block, so we were expecting something like this to happen, right? So having those point of views in time, in mind, sorry, I came back to the same thing. We need a retracement to then continue to go higher, right? So at that point, I thought, I think I'm doing really well right now. I think it was the right choice to not take the buy, or to take it by closing immediately. So I said, let's go for that sell. That sell makes a lot of sense. Nothing else but the extreme makes sense. As you can see, those weeks are just disgusting from my point of view. So I just immediately ignore them, right? So I just went straight for the extreme. And also, as you know, as I talked, as I said on Telegram, I currently have a funded, well, not a funded account, an account that I have to pay to pass through phase 1 and 2, right? Basically challenge and verification. But basically today I was like, this is a test day, because from tomorrow I'll begin to trade with that account. And I was thinking, okay, so this is not a trade that I want to take with the real, with the funder, with the challenge, right? But this is a trade that I do want to take. I thought it made a lot of sense. We had broken main structure, and we hadn't really reacted to any demand areas. Although we are reacting to this. Let's see if we actually go even a tiny bit lower. No. So basically, I thought this is definitely a trade that I would like to go for on the challenge, right? And as you can see, as you already know probably, we failed that immediately. So here came my problem for the day, and it was what happens with the next trade, right? Because we took a loss here. If I was trading with the challenge, I would have highly likely missed out on this trade that we're about to take, which was the first take profit of the day. And basically, my problem is that I want to trade it, right? But at the same time, the loss happened less than 10 minutes ago, right? So it's a little risky, right? Of course, I was on a demo, and I liked the trade. I liked both the trades. I thought both were really good trades. So at the very least, I would have taken them if I was on a demo, or if I had a good amount of money between the break-even point of the account and where I was currently on, right? Because right now this account on paper trading is at 8%, right? 27, starting with 25, right? And as an example, I would have not mind taking that loss, because in my opinion, it was a really good trade. This was a really good trade, and this was a really good trade too, right? And the reason why I went for this is because we took the liquidity. So it made a good amount of sense, and we had only one small break. That's the only thing that I hadn't really liked per se about the trade, because we were kind of in the middle, right? We were kind of in the middle. Not in the middle, sorry. We were within confirmed structure, so I didn't entirely like that, but I decided to go for it anyways, and I don't really remember where the entry was though. 733 and 10, 733 and 10. Hide that, please. Thank you. 733 and 10. 733 was my entry, and 10 was my stop loss. And target, I think it was down here. No, where was it? It was a tiny bit lower than why. Oh, it was 12.9. I thought it was 8R. Oh, no, it was here. Yeah, it was here. I moved that later to realize that it had come all the way down to this. So this is a trade that I took that was the better trade for the day. Another thing is that at the same time, even though it was only one break and we were tagged in immediately, what I do recognize is that after that, we do have a next break, right? We break that low, we break the low, and what do we have? Another continuation. Now this candle is huge, so I would have gone for this. Not sure if this actually got mitigated, but basically this would have been our next trade, which would have had very similar risk to reward. That does get triggered. We break again, and what will be my next entry? I think it would have been something like this, to maybe the 50, because I don't really want to have such a large stop loss, right? But right now we have two trades. That would have been triggered in already, and that would have been a take profit, which took a good amount of time. But basically, even if we would have missed on the first, in my opinion, the second would have been a trade that we should have taken, right? Whether it was on any structure, it should have been taken. Now, you might think that it was a little bit hard to identify the trade, which it was, but at the same time it wasn't. The reason why I went for this trade is two things. We were expecting a reversal. Not a reversal, sorry. I was expecting a complex pullback, a strong pullback, right? A retracement for price to be able to basically, what I call, take a deep breath to then continue to go higher, right? So I wanted to see price go lower before it goes higher. As simple as that. Now, we have a very strong POI on the 5-minute, which comes from mitigating another 5-minute POI, which comes from mitigating another POI, which comes from mitigating another POI, and blah, 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 because it's this. So this POI that we were trading comes from mitigating this, that one from this, that one from this, and that one from maybe this, right? And well, the higher comes from mitigating something else, right? So this is a strong POI. Now, if we have a potential confirms trend, bullish trend from that 1 hour POI, then we could think that what we're expecting to happen is for this to move down, retracement, move up, retracement, move up, right? So this low being created to take this high, right? And this low, the next potential low, being created to take the next high, so this one, right? So that's why, as an example, I also talked about structure, and why structure, being such a simple and stupid thing, can really help you a lot, because it can give you bias, it can give you targets, it can basically give you a lot of stuff, right? So as an example, for me, this target here was being careful, right? And as you know, I closed it a tiny bit earlier. I think I closed it for the account, for the paper trading account, to get to 27k, which was 8% profit overall, and I think it was a 2.5% profit on this trade itself. And what was I saying? Oh, okay. So in my opinion, we have a push down to take liquidity, a push up to take more liquidity, right? And then a continuation to the downside, right? So what do I see? If we fail to break this, then highly likely we're taking the high. If we didn't fail to break that demand area, we went right through, I don't really think that we have anything to stop us on the way on down into this, right? I went for this because I wanted to go safe, and it was 8R on that one. It was a lot of money already, so I was really happy with that profit, right? And I even closed it earlier, and even though, well, it did get all the way down to 13R, so we'll see, right? Did go to, yeah. I'm still happy with that 2.5 that I took. Could have taken maybe 6% or something like that. Well, actually 6.5% profit. But I'm still happy with that 2.5. That 2.5 really allowed me to feel really well early in the morning and get out of the markets. Right, got out of the markets at that point. Did a lot of stuff around home, and then I had a little bit of free time. Decided to come back to charts, see what was going on. I thought that there was maybe a good trade happening, which ended up not working out. Then continued to analyze a little bit while I was playing video games. I was basically just chilling through the rest of the morning, and saw that trade that I sent the screenshot to Telegram, which worked out amazingly. But I just went for a very small risk, as I wasn't really intending on taking another trade, and the risk was just to take the trade. It would have been like taking a trade on MetaTrader with a 001, right, lot size. So coming back to the analysis, the reason why I took this trade is because I was expecting a retracement, first of all, right? Neither of these areas looked strong enough to hold price. I did not like this area at all, so I didn't even consider it, right? But I did like this, which could have been a little bit of a pain in the ass, right? So decided to go for that, aim at that, just in case I was wrong, right? Because you can definitely be wrong. I can definitely be wrong. And yeah, I mean, it made a lot of sense, and we were on a really extreme area. We took liquidity there, we took liquidity here. We came from mitigating a lot of stuff, right? The trade just made a lot of sense. In my opinion, the trade just made a lot of sense, and that's the biggest reason why I went for it. So when I take a profit, depending on how bad was the first few trades, I usually get out of the markets, right? So after that point, as I said, I basically didn't watch price for a good amount of time. And if I remember correctly, I didn't really miss out on anything, right? So we'll skip a tiny bit into that, right? Yes. So let's go back. What are my steps? Analyze 15 and 5 in a structure. Analyze what has happened on the 1 minute. And always keep in mind what scenarios could happen next, right? When I see an impulse, I expect a retracement. That retracement could be on an extreme area, on a cause, on a pause, on many different, or maybe it could even break the low and then continue to go higher, right? Because it kind of happened here, although this was not really a POI, this one. But basically you have times where, as an example here, you do take the low, but you do go a tiny bit higher. As an example, this was just a sweep of liquidity, right? But basically, impulse, you expect a retracement. If you can find the area that price will react to on that retracement, then you can take that. You probably can take that trade and make a good amount of money, right? Make a good profit out of that. This retracement, I was expecting it to get down here. I was mistaken. This small retracement was down to that. I was right. That one to that one to that. Keep in mind that when we broke the low, my stop loss was up here. When we reacted to this, my stop loss was on break even. When we continue to go down, I trailed my stop loss to break even completely. Well, it's a little bit lower than break even, and then will continue to go lower. So, this is literally what I do every morning. And well, for the past few weeks, I've found some really good consistency, which is something that I'm really happy about and grateful. And yeah, I mean, that's literally what I do. I just try to not trade dumb areas, try to not trade areas in the middle. And I think that comes from putting a lot of time onto the charts. And honestly, I haven't backtested it this past month probably, and the reason to that is I don't really like backtesting. I don't really trade the way that I trade on live while I'm backtesting. And as an example, I have some notes here, well, not notes but notepads, where I got 3 notepads. Right now I have 3 notepads, and I got one notepad that is strictly to weekly resumes, right? Another notepad is for daily resumes, right? So basically just say, okay, so today I did this wrong, I did this right, these were my mistakes, these were my well doings or my right doings. How could have I improved? That's the last question that I asked myself, and I've always said, okay, so taking hedge opportunities, a little bit more of paying attention to what's happening on the other side of the market, and well, let's see the next one. Oh, how could I improve my results today following my rules? That's something. Taking more time to analyze, checking all the time frames, and see all of those very small details, or well, not very small details, but taking that small amount of time to write what has happened. As an example, well, I was reading from Monday 4th, so past Monday, right? At the end of the week, which I did it actually on Saturday, I wrote the resume from the week from the 4th to the 8th of October, right? And I said, so what were my common mistakes? I overtraded. I was not being patient, or I was being too cocky, which is something that has actually happened to me a lot last week. I was trading areas in the middle. I didn't follow my rules, trading unclear structure, or refining areas too much. Look at that. I was having fear of missing out and market executing a lot, which, yeah, you don't really have an idea how much I did that just last week. Had a few 15-second entry, but as an example, I do mention one worked. I wouldn't entirely rule it out. And then what were my consistent right choices? And I wrote, I was patient, a good amount of the time, analyzed with a good effort, identify good POIs, paid attention to details, using other time frames have helped me a lot with bias. So all of those small details, right, really have helped me to see where I'm mistaken and to see where I'm actually doing right. So as an example, how could have I improved to this week's results? So I say, I'm confident that I know how to trade, that I can consistently make profits, just gotta be patient. Avoid being cocky, taking the time, stacking confidences, analyzing the trade a couple of times before going for it, not fear of missing out, and not over trading, following the rules, they're there for a reason, avoid revenge trading, allow trades to run, which is an example. I didn't do that today completely, right? Because this one, I closed it somewhere around here, right? I mean, got the, I don't have the line. Where was, I don't remember now. Yeah, we'll see that later. But I did close that trade a little bit earlier. So that's how I've improved. Right, because today I was way more patient, even though I took a sensible this trade, which was this one, sorry, not that one. That one was a good trade in my opinion. Could have avoided it, not gonna lie, because again we are in an area in the middle, and this is a loss that I could have not avoided in any way. And this is a trade that as I could have not avoided this one, I don't think I could have avoided this one by any reason, right? So that's how I've improved. If you want to know how I've improved this past few weeks, that's how. I've just looked at what I've done wrong, what I've done right, and tried to improve on the right side, right, doing the things right, and just avoiding the bad things, right? Because you don't really have to focus that much on the bad things that you're doing. You just gotta ignore them. You just don't have to do them. So, am I being patient? Yes, then I'm doing the right thing. Am I having fear of missing out here? Yes. Okay, let's just not go for it. I just ignore those wrongdoings that I have had for the past few weeks, and I just try to improve as much as I can. Looking at those mistakes, saying, okay, so this is the way to fix them, right? So let's just keep that going, right? So yeah, let's continue with this. Now we had a 15-minute POI here, right? Let's actually go for that. So it's second trade, so you can see we have that 15-minute POI. I just refined it down to this 1 minute because it just looks a little bit cleaner. And what was going through my mind? So this move here, I was already liking it, right? This move here, just like this, didn't want to go for this because it didn't cost anything, right? If we had cost a break, a flip, anything that could have happened, that could have given me a little bit of a push to actually go for it, I would have definitely gone for it because I really like the move for some reason. But it never really cost anything, so I ignored it completely. So I saw this, and I saw that it was already mitigated. But this demand supposedly is created to take the next high, right? To basically make a higher high, but it failed, at least for now. And as you can see, price ranges a little bit on that, but then it failed to hold. And I had a little bit of a fight with myself on this one because I was like, I've been going for the extreme a lot lately, right? And I think it can definitely go for it, right? But at the same time, in my opinion, the cost was looking really clean, right? It was looking really good. And I decided to go for it. And as I said, well, it's simple, my account was left on 27.021, I think it was. And I risked exactly $21, right? Because I didn't want to go before below 27k. No, not really a reason much, not really much of a reason why. Because it's a demo and doesn't really affect at all. But I decided to go for this like this. I don't remember if I placed the entry a tiny bit higher. Yeah. So there and stop there, 14. Because I actually placed the entry here and I saw that it was a high stop loss and I said, let's just go a tiny bit lower. So you might think we have an area of demand here, right? To be fair, I do like this one better than this one, right? Because if I was to try buy, I like way better this one than this one, right? So I would have said, okay, so we have an area of demand here, clean, never mitigated, and here. Was mitigated, failed to create a higher high, right? Already, so I would have definitely gone for this if I wanted to buy. Now the thing is, why did I not go for that sell? For that buy, sorry. Maybe I was just expecting a retracement. Honestly, I don't really remember why I actually didn't go for that buy. But maybe I just didn't like it. Maybe I wasn't even in the market because no, yeah, it was because I saw this being developed. I just didn't go for it. Oh, because of this. Hold on. So, price had created. Well, actually, I think it was in the 1 minute. So we have this potential continuation here because as you can see here, we had price was mitigation after mitigation after mitigation, and then it never mitigated this area, right? So that's a pretty strong area. If I would have been in the markets, I would have definitely traded this, right? A little bit risky due to where we're coming from, which is an area that since midday, well, not midday, but early in the morning, basically, I was expecting a good and strong reaction from this POI, right? So we're coming on a pretty strong area, but I think I would have gone for this as we have the flip. Sorry, not the flip, the break of structure, right? So when we react to this, but then fail to hold, but we ranged a little bit, I like that area a lot, right? So that's the reason why if I said, well, if I want to buy, it'll be from here, right? And having an area like this, and probably if we check to the left, we do have an area of demand, supply, sorry. Well, kinda, but not really. I mean, this whole thing, as of this, probably range, right? It could have been used as an area of supply. But I didn't even check to the left because I was so in love with this one because it's literally a range before the cause to a supply break, right? And having this area in mind, I mean I drew this one to see this flip, right? Otherwise I would have missed out on that flip. And I drew this one because I thought it had the most importance out of these two, right? And I was a little bit scared of it as it did react from that, right? Didn't actually break it before getting into the area. But I mean, it was very small risk. I wasn't really scared or anything like that. Now, I did say to myself that this is definitely not a trade that I would have taken on the funded, right? And mostly the reason why was because we were coming from a strong demand area, right? Not, I don't know if a strong demand area, but an area that did cause a break, and if we consider the area above, could have been considered as liquidity. So it is an area that holds at least a tiny bit of importance, right? So just because of that, I wasn't feeling really comfortable, and at the same time, this the dispute between the extreme and the cost really kind of threw me off, and I wasn't really interested in actually going for this sell if I would have been on the challenge account, right? Also, after taking this take profit, I would have not traded, right? I would have not taken it anyways. So, yeah. And as you can see, the trade worked out really well. I have the line of where I closed it, but I think actually it wasn't this week. Sometimes when I close the trades, I get really lucky because, as an example, in this case, it does do a pretty strong pullback, but then it does hit a profit. Don't get me wrong, right? But I usually tend to get lucky when I close those trades early. Sometimes I don't, right? I close it and immediately falls down. But well, it is what it is. So those were the trades that I took today and the reasons why I took them, right? So something that I do want to say too, I said on Telegram, let me actually see if I can find the exact thing. Oh, here. So while price is reaching to a POI, it's reaching a POI, not to a POI. A POI on the 15/5 minute trade as continuations. So I have this methodology, no, just this way that I trade now, that basically says, so if we're approaching a POI, then we try to take the continuations. If we are in a POI, we try to take the reversals, right? If we break the POI, then we trade continuations. As simple as that. I mean, that's literally how I based my whole thing. And the entry is based out of, phantom trading methodology, right? So the way that they trade. Trading on demand areas, supply areas. Well, actually, supply and demand, I think I've learned most from fractal markets than Phantom, to the fact that, well, when they started teaching demand, so supply and demand, I was already out. So basically, yeah, so as a continuation, what I want to see, as an example, after this trade, we're on a continuation, right? Because we have an area of demand, causes a reaction, flipped, but failed to hold, so it flipped. We even have another demand area, causes a reaction, but then failed to hold again, right? So when we have this, I look for a couple of things. Oh no, I don't have them written down. Never mind. So what I look for is for exactly this. We have an area of demand, in case we're looking for continuations to the downside, right? We have a demand area, price gets to that, causes a reaction, fails to hold, we go for the cost to that break, right? The continuation would have been there for me. The other thing that I look for, as an example, this low was created and then it took a lot of time to break. So for me, that's a major break when we break that. And I would have gone for the cost to that. Now, as an example, I would have gone for the extreme in this case. I don't know why, but I've seen it work better, right? The actual cost, unless it's a range or something like that, like something a little bit more than just this small pause, which is what worked out, I would have gone for the extreme in this case, right? I don't know. It just makes more sense for me to go for that. And it also comes from a little bit of a continuation, right? So when I have a major break, I go for the cost, right? Sometimes, as I say, the cost is this, so I go for the extreme. Sometimes the cost happens literally over the line, breaks it, but then goes for the extreme. And sometimes we'll just go for the cost, right? Doesn't really have, like, you could think that euro dollar or GBP dollar, well, yeah, euro dollar goes for the costs, GBP dollar goes for the extremes, but I've kind of come to realize that basically it's not really much of a preference, maybe. I don't know. Basically, I've seen euro dollar go for the extremes so many times the past week. I mean, we could consider this move price going for the extreme, we wouldn't really go for the cost. The cost maybe would have been this as the cost of this break, right? But did cost something? No, it didn't really cost much. So, but yeah, basically that. And besides from that, what else? Well, like continuation. Let's say we have this area, right? Let's say we have this area, and I don't really like it to take a risk entry, and this happens, and I go for this, right? The confirmation entry, just a continuation. And the same thing to the other side. I mean, on the other side, well, as an example, looking at it from a little bit zoomed out, we have push up, area of demand, fails to hold because it's this extreme on the 5 minute, right? So that will be my continuation pattern, right? I mean, as simple as that. And on the reversal side, it's literally this. We just wait for price to get to a POI, a strong POI that could cause a supply to demand or a demand to supply flip. I am recording right now. And then you try and go for that cost. So here we had an area of demand that created this move up. React to the area of demand. We failed to create a high, comes back down, fails to hold, go for the cost, right? On the other side, we could see something a little bit less easy because this trade, in my opinion, was very simple. It worked textbook. That's the phrase when a trade works out like textbook, literally. I'm thinking about something, but I don't really remember. So besides from that, as an example, if I don't have a flip, let's say this is POI, I wait for like a break, the first trade, and then I go for the second, right? So confirmation entry in case we only have a break. And I think that's basically it. I mean, here's an example. This was a little bit riskier, right? We could have gone, as I said, for the confirmation entry, which would have been a little bit safer and a little bit better. But I don't know, it just made a lot of sense for me. And sometimes I try to think as much as I can, why did I take this? Why did I take that? And of course, I do have confidence. This is not that I just go for it and well, it works out. No, I can't do that. But basically, sometimes I do things out of logic. Sometimes I'm like, you could tell me, isn't this a good area? I mean, it could be. I would go for a confirmation entry there, not a risk entry. In this case, if I would have waited for a confirmation entry, it actually would have happened, and I actually would have taken a loss. But looking at the whole picture, I may would have avoided it due to the area that we're coming from, right? And as an example, just looking at the area, if I was on the live markets, I don't really think that I would have gone for a sell here due to where we're coming from. But I would have not really thought of that. I would have just said, no, that's not a good area, no. And that's good in my opinion, because at the end of the day, I mean, I am having such a intuitive kind of trading that sometimes I realize which areas are good and which areas are bad, which is, well, really good, but sometimes, of course, that can fail. Don't get me wrong, I'm not saying I'm Jesus here. But yeah, I think that's a long video. I hope this helps you in a way, right? I think this whole thing is just going to break, which it wouldn't make that much sense. I mean, it depends if we respect this or not. But if we don't respect this, unless we go all the way down to this, but like as an example, right now, move up, move down, move up, fails to create a higher high. So right now I see this, move down, move up, move down. Not really expecting price to respect this, nor this, right? Because this low was created to take this high, and it didn't. And it's breaking a lot of structure now. So I don't think we'll go higher, but yeah. That's pretty much it. I really hope that this was something that you can take something away from it, right? Hope that you enjoyed. Hope that you learned something from it. Hope that you can apply this. And something that I kind of want to try is to take a couple of basically record myself live trading as I did the other day and upload it to YouTube. But it takes a little bit of time because I'm usually not at my desktop when I'm trading. So sometimes I'm using my computer from my netbook with something like what's the name to trade? No, not trading. I won't remember, but basically remote desktop to call somehow. So I can't record those minutes, and sometimes it can be up to an hour, right? So that's pretty much it, guys. Hope you enjoyed. Hope you take something away from it, and you know that any question you want to answer, you want to ask me, you can do it through Telegram or YouTube, because I'm not on Instagram. I'm not on social media currently. So yeah, I'll be seeing you soon tomorrow.